Welcome everyone to the CFO Swinger Watch newsletter's technical analysis video for the week of April 1st through 5th. First of all, congratulations for making it through to the second quarter of this fiscal year of 2024. Give yourself a pat on the back for making it through the first quarter. You guys deserve it. Second of all, happy April Fool's Day. Now, before I begin with the markets, I want to give you kind of a visual of how much we have run up so far since last year's lows. Now, specifically, what lows am I talking about? October's lows. If you guys remember last year, before we were even in quarter 3, I told you guys that we will be making a potential low between the transition of October to November, and that's exactly what we did, as we saw a nice pivot forming in late October and right into the start of November. And that's when we began a nice run up to the upside. And so if you go all the way down into the lows of October, okay, and we slowly go up back into last week's close, we are up about 27.50%. That is huge, right? And so this is an amazing run up and clearly tells us that we are in a bull market. So do not believe in the naysayers on Twitter, on FinTwit, or wherever platform that you guys are looking at, and people are telling you that the markets will be crashing 20, 25%, 30%, whatever the number is. Because that is not happening. We are currently in a bull market. All right. Now, I do briefly want to go over, based on this S&P 500 weekly time frame chart, I want to give you guys kind of a one of the few warning signs that I'm looking at for a potential reversal, for a potential textbook pullback, which I have been talking about since February. Right. Now, again, since February, I've been giving you guys the reasons why, but I've also been telling you guys to make sure you guys understand that we need to be following the trend. Understand that following the trend is the most important part about the market, but at the same time, you guys should keep a potential reversal in the near future in the back of your heads. All right, you guys have to be storing it in the back of your head that there is a potential for the markets to move lower because of all the signs and indications that I've given to you guys since February, right? So there have been a lot of converging and diverging indications, but so far the market price trend is king, right? Now, on the weekly time frames, okay, on the S&P 500 or even on the NASDAQ or, even the Dow Industrial Jones, whatever it may be, okay, we are still seeing the underlying indications that we need to be keeping in mind for the short to mid-term future, because we do not know when the market top is going to occur, right? All we can do is be prepared for it. So, first of all, on the S&P 500, the volume, right? I've been talking to you guys about this. Right, we're seeing the volume continuously getting lower and lower, especially the weekly green buying volume bars are consistently getting lower and lower and tinier compared to the bigger red selling volume bars, the weekly red selling volume bars, and they continue to get bigger compared to the green ones at every single pop. So that clearly indicates that the bullish momentum is slowing down. Now, price-wise, we need to be seeing the reflection of this lowering buying volume reflected on the price action. And how will we see that? Well, when the price decides to move sideways. Because again, whenever we see the end of price trends, we tend to see consolidation. So in this case, when the market has moved straight up, if we were to see a potential ending of this bullish momentum to the upside, we will be seeing sideways consolidation, right? And then we'll see that official move to the downside. Now, the same goes for a downtrend, right? It's the complete opposite, vice versa, right? If we see a downtrend, we will see sideways consolidation first before we see an official reversal back to the upside, right? So now on the weekly time frame, we have yet to see any type of sideways consolidation. However, there's one single thing that you guys need to look out for: an official retest of this weekly 10 SMA. Right, so this red line here, or what my mouse cursor is currently following. Now, why do I say this? Well, based on the most recent data that we have, okay, the historical data that we have here is, well, the price action that we got leading into Q3 of last year. So based on this weekly candlesticks, these two, right, we got our official pullback, right? And this pullback occurred near the all-time highs that we saw back in 2021 and the official highs of 2022, early 2022. And so once we reached that level, we saw an immediate rejection, a pullback, and then an official retest of this weekly 10 SMA. And so why does that matter? Why does this official weekly 10 SMA retest matter? Because that will give us the first official warning sign that the bullish momentum is slowing down. It's officially slowing down when we see the retest of this weekly 10 SMA. Now, of course, that does not mean that sellers are going to see a huge resurgence and we're going to see a big pullback that will cause a market crash. That's not what I'm saying. What I'm saying is that if we do see a retest of this weekly 10 SMA, we'll be seeing the bullish momentum slowly dying down, which gives that window of opportunity to open, slightly open, for the group of sellers to slowly start seeping in and filling in the spots where the bulls have left behind, right? So that little hole can become larger and larger, especially if the market starts to move lower and below this weekly 10 SMA. And that's exactly what occurred back in mid-Q3 of last year. And that's officially what caused that official textbook 10% pullback to the downside. And so now, obviously, I'm not saying that we're going to see a parallel price action here, but that's the first thing that we will be looking out for, an official retest of this weekly 10 SMA. So again, guys, make sure you guys remember this and keep this in the back of your mind. All right, I'm not saying that this is going to happen right now in the second quarter here of this year. All I'm telling you guys is to keep this in the back of your head, as I've been saying since February. All right, now let's go back to the daily time frame and bring back my levels. So on the daily time frame, we have officially created our first resistance level, a major daily resistance level at 524, right? And how do we know this? Well, based on this daily candlestick and based on last Friday's candlestick, we have officially rejected at this 524 whole number level. And so if you continue to reject at this area, there can be, again, a potential pullback where we continuously move to the downside and continuously start moving sideways, right? Now, as I've said initially, there could be still room for us to move to the upside. And I can think that the market can potentially top out at 530. That's right, $530. Now, as a warning sign, this is an arbitrary, completely subjective number. Again, this is a subjective number. So don't try to ask me why I think the market can potentially top out at 530. It's just a whole number that I'm choosing, and it just seems quote unquote right to me, right? It's just a subjective, arbitrary number, right? So do not fight in the comments down below as the reasons why I could potentially be choosing 530. There is no other reason other than the fact that it's completely arbitrary and subjective. That's it. Right? So 530 can be touched by the markets here. And if we do see a rejection, then I can potentially see us basically moving sideways between 524 and 530. That's kind of my complete prediction in the near-term future, around short to mid-term future, as what could occur when we start to see that consolidation before we see any type of a move to the downside, any type of a reversal to the downside. All right, so that's kind of my prediction. And if you guys are using SPX, if you guys solely use SPX, look at that 5300 level, that 5,300 level, and make sure you guys pin that as the potential top if you guys want to use SPX only. All right, so with that market review and the potential prediction here, let's go over our first name for this week, RH. So I want to keep RH here with this RSI indicator, the relative strength index here. So the reason why I want to look at RH is very, very simple, right? So this could be potentially a very simple and one of the easiest swing trades for this week. Why? Well, first of all, on the weekly time frame, this one has been making a huge multi-year macro base. And if you guys have been seeing the recent trend with the newsletters, we've been kind of focusing our attention to these massive bases. Why? Well, number one, because they are laggards, and you guys should know what that means if you guys have been with us, Charts Focus 1, for quite some time. And laggards are important because number one, they do well if the markets decide to pull back. All right, because we start to see that money rotation out of leaders and into laggards, right? And number two, these laggards can have amazing bases that can provide us with the amazing opportunities to long to the upside as the price trend or trends start to move back to the upside. Because again, they've been moving sideways and doing nothing. There has been no progression to the price trend or the actual share price itself, performance-wise, for the last couple of months, or for example, like RH here, for multiple years. And so RH has been making this huge base between $207 and $406.50, or if you guys want to round up, $407 for over a year, since 2022, right? So this has been a long journey for this name to make this really wide base between 207 to 407, right? And so it's quite a big base, right? Hence the reason why I said it's a macro base, not a micro base. But with that out of the way, I want to take a look at the this nice wedge chart pattern that this price action has clearly made while within this macro base. So this is a micro wedge chart pattern that has given the price to break out to the upside. And thanks to this initial upside break, we've also gotten a very positive reaction to earnings last Friday. So let's go back to the daily time frame here. All right, so last Friday we had a very good reaction to the upside, and fortunately for this name, we're able to see the RSI peaking all the way up to that 70 value, right? That overbought 70 value, and closed at 71.79 for the RSI. So that clearly indicates that we are overbought, but that also indicates that there are a lot of buying activity going on. The share price continuously is being bid up higher. That's all that it means when we are overbought right now. And based on the price action so far, sellers are not to be seen anywhere. Why? Because if you were to see a bunch of sellers on Friday for the official reaction to earnings after hours on Thursday, okay, we would have broken to the downside, and we have officially filled in this massive gap up that we saw in between Thursday and Friday's candlesticks of last week. But instead, that's not what we got. And so we pushed up higher and higher and higher until we retested this daily resistance level at 355. And also we began to fill in this gap down area highlighted by this circle here. And we've kind of officially filled in about, I would say, 25 to 30% of this gap fill. And so if we were to completely fill in this gap, we would need to go all the way up into 366.35 to officially fill in this gap down 100%. And so based on the price action of last Friday, I truly believe that this can become one of the easiest swing trades for this week. And that's the reason why I made it number one for this week's watch list in the newsletter. And so with that in mind, if you go down to the 2-hour time frame, one of my favorite intraday time frames here, there is a very nice tight flag forming. And we want to be able to capture this flag breakout over 355, hence the reason why, if I go back on the daily here, okay, our entry point is over 355.10. That will be our long entry point. And guess what, guys? If we're able to break over 355, we can potentially be seeing a continuous move to the upside for the next 2 to 3 trading days after the initial entry point, right? And the reason why for that, there's only one reason. This is an orb trade, an opening range breakout. And what has caused that opening range breakout? Well, this really drastic push to the upside by the bulls from the reaction of earnings. So that earnings was the major catalyst to break the price up higher and officially make this name have a huge bullish momentum to the upside, right? So, if we were to break over 355, then we can officially completely fill in this gap down, as I've said a few minutes ago or a few seconds ago, and continue to push up until we see that official retest of that large resistance level at 407, which again makes up that massive multi-year macro base chart pattern. So in the longer term, right, if you were to see continuous move to the upside, and again, there's still a lot of room on the weekly time frame. We're not even overbought on the RSI on the weekly time frame here. We can continue to move up and break over 355, ultimately retesting on this weekly 200 SMA, this yellow line here, and again, retest at this 407 resistance level that makes up that macro textbook flat base chart pattern. And what I love about this weekly 200 SMA is that it's currently slowly curling up higher. And so by the time, hopefully, ideally, we are heading over to 407, I would wish to see ideally this weekly 200 SMA converging at this 407 level, because if we do, we will see an official retest at 407 simultaneously with the weekly 200 SMA, and that will give us a very, very nice pivot back to the downside, as we've seen right here at the very first 2 retests of this 407 level. All right, so that is it for RH, and let's take a look at our second name. So our second name looks very similar to RH, SWK. So for this one, I'm not going to look at the RSI. So this one is another, yet again, very, very, very good macro multi-year base chart pattern, right? It's a very nice flat base. Now, what I particularly like about this specific name, SWK, is that it is making a very nice flat base, but at the same time, we're seeing another macro wedge chart pattern forming. So unlike RH, as previously seen, this isn't a micro wedge because this is a part of this very large flat base, and it's forming at the right side of this large flat base chart pattern. And this is a macro wedge as well because it's been forming since late July of last year. So it's not a year yet, but if it continues to completely fill out and complete this chart pattern, there is a chance that we can at least see nearly a year's worth of sideways price action and completely staying within the parameters set up by this macro wedge chart pattern. Now, again, the reasons why I love this macro wedge chart pattern is that we're making higher lows. So that is a clear indication that bulls are active in this name while we have been moving sideways, while we have made no progress to the performance of this stock or the share price. And so based on the longer term perspective, based on this weekly time frame, there's again that possibility for this name to continue to move sideways until it completes this macro wedge chart pattern. Now, if we do decide to not complete this macro wedge, okay, we have to go down to the daily time frame to take a look at this. So if we do not complete this macro wedge, we can very easily break over that triple digit share price, that golden number of $100, and see a nice breakout over that triple digit number. And again, that will be our long-term entry point, and see another breakout out of that macro resistance trend line, this descending resistance trend line that again makes up that macro wedge, and continue to move to the upside until, let's go back to the weekly here. So we have to switch back and forth here for these names until we reach the very, very significant weekly resistance level sitting at $112. So there is a huge supply area between 100 all the way up into 112. There's a nice 12-point price range here. All right, so this is a huge supply area, right? It's a range of over 10%, so around 12.50% here. And there can be a lot of gains to be made if we were to get a very nice entry point over $100 and see that price continuously rise slowly at that, again, to the upside until we reach $112. Now, mind you, this is a pretty liquid name, but it's teetering between an illiquid to liquid, because again, if you guys remember, one of my parameters set up by a swing or swingable, quote unquote swingable names, we want to be seeing liquid names. So at least minimum a volume of 1 million and over, right? But this one's kind of teetering on the edge here, since the average volume continues to kind of waver around that 1.1 to 1.2 million in volume, right? That range. So hopefully we continue to see a rise and uptick in volume as we've seen the past couple of days here, as we saw a nice breakout, nice pullback, and another potential impulsive run up. All right, so essentially we're seeing a very, very textbook run up here, right? So higher highs and higher lows is what I want to see for a potential swing trade for short to mid-term to the upside, right? And that's essentially what we're looking for here. Now, essentially, if we do see a earlier entry point, if you guys want to get an earlier entry point, I would recommend just a simple breakout over last Friday's high, which was 98.28. So personally, I would take an entry point at 98.55. Okay, but just remember, guys, this is a potential swing or position trade. Okay, a position trade is a trade that kind of goes on for about 3 to 6 months. Okay, so if you guys are looking for a position trade on this name, then look for a hold all the way up into the retest, the first official retest of $112. Okay, and I have given guys the rest of the potential price targets in the newsletter, so make sure you guys read that. And last but not least, we have W. So Wayfair has actually kind of quote unquote benefited, even though it really didn't, last Friday from RH's very nice impulsive breakout to the upside, that nice orb-ish move to the upside. All right, so if we go back to the daily time frame, this is what we saw, right? We saw a very nice gap up from Thursday's close into Friday's open, but unfortunately, it really wasn't a full beneficiary of RH's bullish breakout, and it officially closed that gap and closed a bit bearish to the downside. Now, what I love about the fact that last Friday's price action is that if I go back in the weekly here, we have a new trend line. That's right. We have a new trend line here after breaking out this nice small micro wedge from this huge multi-year macro base. Again, same theme across every single name of this week. This week's CFO Swinger Watch newsletter. But again, Wayfair has been on the newsletter last week as well, so I'm not really going to go over this since I already did it last week. But this macro descending resistance trend line is another trend line that we need to be looking out for, because we've officially turned it into an official descending resistance trend line based on last Friday's rejection. So last Friday's highs was at 71.31, and also this rejection converged with this nice big supply area that stretches from 68 as the lower range and 74 as the upper range. And I've already gave you guys this supply range last week as well, so I'm not really going to delve deep into it. So there is a lot of selling going on into this name, but I am hopeful, because if you do decide to pull back, I wholeheartedly believe that we can still see an official retest of 66.50 as our new support level. And if we don't, see this 66.50 level being used as a new support level, we can potentially come back down and again see an official bounce at 62.50, which I personally will be waiting for. Hence the reason why I kept this entry point the same as with last week. So again, this is a little bit sketchy here with the increase in selling volume as well, with this increase in the red selling volume bar. But at the same time, last Friday's rejection was a little bit icky. So there's a chance that we can see a bit more bears coming down hard at this previous 66.50 resistance level and not turn it into a new support level and come back down to at least minimum retest this daily 10 SMA. But again, we have yet to see that, right? But if we do, 62.50 is still my level. I do have alerts set up at this 62.50, which has not triggered yet, and also at the 66.50. So make sure you guys have those alerts set up. If you guys have not set any alerts for this name or any of the other names that we have discussed so far in this video, or even last week as well. Right? So Wayfair, the same price targets are still here for us. I mean, we have yet to hit any of our price targets. So make sure you guys read the newsletter to see the price targets. But again, Wayfair is a bit frustrating name, but when the trend decides to go our way or one-sided, it tends to do very, very well. All right, with that is it for this video. I know we're about to hit that 28-minute mark here, but hopefully this video was insightful and most importantly applicable, and hopefully we can get some very, very great swing trades out of this. And if we do, make sure you guys smash that like button down below. And if you guys have not subscribed yet to the Charts Focus One channel, make sure you guys hit that subscribe button down below as well. But most importantly, and on top of that, hit that notification bell so that you guys know when I am live and know when I have uploaded a new video. All right. So that is it. I'll see you guys tomorrow morning. Good luck, and I'll see you guys next week for the next technical analysis video. Thank you so much for watching.